Hello friends, let us discuss the remaining part of unit number 6 mutual funds. This is the lecture series 9 where I would like to discuss the last part of your syllabus of unit 6, that is securitization. Securitization. I think most of the students are hearing this word for the first time. It is a recent kind of a development happened in the financial market. The securitization first concept has been launched in India from Citibank, and after that, most of the financial institutions are tossing this activity. Securitization is nothing but converting the uh, receivables or idle assets and to marketable securities, converting an ideal assets into marketable securities. That is called securitization. That is conversion of asset into marketable securities. That is issuing the bonds or the investment instruments against certain assets which are lying with the uh, issuing company. Issuing company. That is a securitization. This concept is a bit complex in nature to understand, but we will discuss each one of the concepts connected with the securitization. This lecture includes the securitization concept, securitizable assets, what kind of assets can be converted into securitization, and securitization process, need for securitization, and parties. It is not portos. There is a spelling mistake. There is a parties for securitization. Who else are involved in the securitization process? Please listen carefully to understand the concept of securitization. I would like to explain this with a specific example. Just we will see some of the what you call as the concepts or approaches of understanding the securitization. The securitization refers to conversion of illiquid assets into liquid assets. These are the illiquid assets which are converted into liquid assets. It is a process of selling of assets by the person holding them to an intermediary who in turn will break such assets into marketable securities, in the sense that the assets of one issuing company are transferred to another company which is more intelligent in breaking the assets in converting into marketable securities and then selling those securities to the investors. The basic purpose of this is to release or to get rid of certain kinds of assets and increasing the capital of that issuing company. That is called securitization. The another approach of the securitization, it is a process used by the banks to create securities from loans and other income producing assets. It is nothing but the loans and other producing assets are securitized. The securities are sold to investors. This removes the loans from the banks. This is going to remove the total loans from the banks balance sheet and enables the banks to expand their lending faster than they would otherwise be able to do. It means it is the basic purpose is to increase the what you call as the quantum of funds of the banks to lend more to other people. The third approach, that if you see in securitization, homogeneous pool of assets are identified and then they are packaged into a new instrument that can be sold to investors whose payments are supported by the cash flows from the pool. If I read all this, I think it is very difficult for you to understand the concept. We will discuss with a specific example what that securitization is. All of you know the company called DHFL, that is Diwan Housing Financial Limited. It is a non-banking financial institution which gives the loans and advances to the people to construct the home loans. So when it issues the home loans to people, what happens? The people who take the loans from the banks to the tune of 20 lakhs, 30 lakhs, 50 lakhs, and the period of loan is also ranging from 10 years to 30 years. The range of the loans, minimum of 10 years to 30 years. Once these loans are issued to them, DHFL treats these uh, buyers of the housing loan, their customers, as an asset because they are the debtors for the company. Am I right? When being the debtors of the company, they are shown on the asset side of the balance sheet. They are shown on the asset side of the balance sheet. And for the next 15 to 20 years, these assets are remaining on the balance sheet, and there is no any kind of further changes in the asset level except the EMI that the company is receiving. EMI that company is receiving. Now, if you see the loans that are being given to the customers of by DHFL, they are categorized into various levels. One is called as first level of loans. They are called as high level loan buyers, may be classified as a green zone, where 100% collateral security is given for the loan. That is, their assets are mortgaged with the DHFL, and they have taken the loans, and they are the prompt payers of EMI. They are the prompt payers of EMI. There is a second class of what call as loan buyers who will take more loan than the assets given as a collateral security. They don't have what you call as fixed assets or mortgageable assets with them. They give partial assets and give guarantee for the further assets. What you call as credit-worthy customers or credit-worthy personalities in the society are giving a guarantee for that. There is one more class of what you call as third class, the dry level class of the customers who don't have any assets to give as a mortgage, but they are the salaried employees. Their future earning are given as a security for the loan, and their employers are giving the guarantee that the money will be deducted from their salary and it is paid towards the EMI, and the asset what they are constructing is itself a collateral security for the loan. So you could find out these three class of loans. Now the company, if it wants to liquidate this asset and securitize this, then it can issue certain kinds of what you call as bonds or instruments of investment to the public against these securities, because these securities are idle with the bank for several years. Instead of keeping these illiquid assets, they want to convert it into liquid assets, where against to these kinds of assets they are issuing what you call as debenture bonds in the market as a collateral security for the investors. That collateral security is nothing but the loans, housing loans that the Diwan Housing Finance Limited has given. So now what happens if it materializes? If the assets are issued, the bonds, then the bonds are purchased by some other financial institutions. Take an example: the assets of housing, the securities which are issued against the loans of the DHFL, if it is purchased by Kotak Mahindra company, say for example Kotak Mahindra Bank. So the Kotak Mahindra Bank is investing in the particular assets, that securities issued by this DHFL. And now what happens, the DHFL is transferring the rights of collection of rewards of these housing loans on the head of Kotak Mahindra by issuing them the securities. Now, when the security is purchased by Kotak Mahindra of DHFL housing loans, which are securitized against that particular loans. If the bonds are issued and if it is invested by housing for that Kotak Mahindra becomes the whole and sole responsible person to receive the what you call as a regular income in the form of dividend or in the form of interest by these assets, by these debtors. Now, any kinds of default happens, then Kotak Mahindra can take an action against those what do you call as default holders and recover its investments. Now, what happens? The amount of the investments that a Kotak Mahindra, the amount of the returns that Kotak Mahindra is expecting for next 10 to 15 years is the benefit or reward to Kotak Mahindra. Now, the Kotak Mahindra is interested to buy the bonds or securities of this DHFL, which is substantially supported by the collateral loans which are issued by the DHFL to its customers. Now, what will happen if it is done? How it is beneficial to the investor as well as the issuing company? Now, here the issuing company is nothing but the DHFL. The DHFL is going to reduce the unnecessary idle assets and convert that asset into capital, so that additional capital which the DHFL collects by issuing the bonds against those assets are a kind of strength that DHFL will get to expand its business, to give more loans to other people. So now the capital is generated out of such kind of loans securitization. So now understood the concept. I think securitization is nothing but the assets which are converted into bonds and issued to the investors. Now, all assets cannot be converted. The assets which are having a collateral security and confidence to the investors are the only assets which are being liquidated. Now, for the purpose of giving a guarantee to the investors, there are some people coming in line. For example, for securitization purpose, for making it convert into bonds and all that, legal procedures are highly involved. So now the DHFL will appoint certain people, intermediaries or administrative officers called special vehicle instruments called as special parties. These parties will make that legal procedures to convert that illiquid asset into bonds, into securities. This is called securitization. And this bond, when it is converted, is rated by certain rating agency that we have already studied what the rating agency is. Rating agency is studying the possibility of recovery of that dividend or investment amount in future. So the quality of the asset which is securitized is announced by, is evaluated, and the rating is done by the rating agency. Now the rating agency is also involved in it. And there is a one more party called as what to call as the if it is converted into mutual funds and all that, the trustees will come into existence, and the investors trust is going to take care of the quality of the assets and the mutual fund investments by the this one. Now the investors are like Kotak Mahindra or some other financial institutions who are going to buy that instruments either in the form of debentures or in the form of mutual fund units, as the case may be, how the instruments are created for that security. So now the total concept talks about securitization is the process of selling of assets by the holding company, that is the company like DHFL. They are going to sell that particular loans and advances which are considered to be the assets. When you give a loans and advances to somebody else, when they become the debtors are the what you call as assets of the company. Now the assets are fixed assets and they are long-term assets. So instead of keeping that long-term assets idle in the company which do not have any kinds of things to be done, now the companies like DHFL will convert them into securities and transpose those securities to others. Now anyhow the returns will be paid by the loan holders, those who are called as obligators. They are called as obligators, and there is an obligation on the part of the loan takers of the DHFL, those who have taken the housing loans. There is an obligation that they have to pay out. But now what happens, when the securitization is done, they pay the money to the what you call as the DHFL in a regular basis, which the DHFL channelizes that automatically to as the reward to the investors. That is like Kotak Mahindra. So this total process or concept is called as securitization. Now securitization is gaining a more momentum in the market because most of the financial institutions which are holding their assets which are illiquid, which are not useful to them, are made into liquid, and investment options are created to the investors, and it's a good amount investment proposal for many of the investors like Kotak Mahindra or some other institutions to come forward and invest money. So this is the total fund of securitization. If you have any confusions in understanding, please ask questions in the WhatsApp group, so or call me so that we can discuss it properly one to one. So now what kind of assets can be converted into securitizable assets? That is called securitizable assets. One is residential market mortgage loan. The loans which are taken for construction of houses, they can be easily converted into mortgage backed securities. They're called as mortgage backed securities because these are the securities which are conducted mortgage. What is a mortgage? Mortgage is a contract between the two parties, that is a banker and the housing person who takes the loan. So now what happens, the assets, fixed assets of the person who has taken the loan are given as a collateral security for the recovery of the loans. If the loans are not recovered, if the loans becomes NPA, what you call as non-performing assets. What is non-performing assets? If the loans taken by the customer is not paid out, EMIs are not paid out continuously for 3 years, it becomes continuously for 3 installments. If he does not pay, then it becomes what you call as non-performing assets. In case of non-performing assets, the company can exercise its powers on the assets of the mortgaged assets of the customers and recover the loans and recover the loans. So these loans can be recovered under the Surfacia Act, that is Securities Reconstruction, uh, that is Surfacia, Securities Reconstruction and Financial Conversion, that is Securitization and Reconstruction of the Assets. So in this case, what the loan given banks like DHFL will do, if there is a NPA, they will approach the courts and take the power to seize the property of the customer and uh, uh, take the assets into custody, and these assets are converted into what you call as instruments, mortgageable loans, and it is investors are asked to invest the money in that, and the property will be what you call as sold out in days to come by the banks and all that. So this is how the investors interest is protected in giving the rewards. The Kotak Mahindra comes forward to invest in such assets because there is 100% liquidity of the assets possible if there is any default arises. If the default does not arise, then the securities which are the loans and advances which are paying out regularly, they will collect the EMIs and settle it for next 10-15 years. So this is how the securities. So mortgageable loans, commercial mortgage loans, that is for the purpose of business, not for housing. Residential mortgage loans are for construction of personal houses. Commercial mortgages are for construction of commercial establishments, maybe hotels, or maybe recreation clubs, or maybe factories, or maybe any of the commercial buildings which are constructed where the companies or corporations will take the loans here. In case of residential market mortgage loans, individual customers will take the loan, whereas in commercial mortgage loans, the corporations or entrepreneurs will take the loans for establishment of business units. So these are the two basic mortgageable securities. There are certain kinds of other assets also, that is what we call as B class assets. B class assets are less what you call as securitized, not highly securitized. If the rating of these securities are made, mortgaged backed securities are considered to be A double plus or triple A class of securities. So now the ratings of companies like your ICICI ratings and all that, or what you call as CRISIL, or any other rating company, if it rates these mortgage loans as triple A, where there is a less risk. And there is a B class of securities where there is no much what you call as backing, but there is a legal power with the company to recover these debts. That is, like for example, credit card receivables. If the credit cards are issued to the customers, most of the customers buy the goods on credit cards and pay the money, so they are also debtors to the banks, debtor to the financial institutions. Auto loans receivables, auto loans are the loans taken for auto, maybe a four wheeler, two wheeler, or like that. So most of the people repay the money. If they do not repay the money, then auto will be seized out and it is sold out. But here what happens, when the auto is seized out and sold out, there is the because of the depreciation value, the auto may be sold at a lesser rate where the loan may be more. In such cases, the investor has to face a little problem. That is what it is called as B class securities, but it is an anticipated risk. They will not be the risk. Normally, while issuing the auto loans, you might have seen that the bankers issuing the auto loans will take first installment. That is what we call as a higher purchase system. They take first installment of around 20% of the loan, and then ask the 80% to pay in EMIs within next 7 years. Maximum auto loan period is 7 years, so it will be matched there also. Then there are certain personal loans which receivables which do not have any collateral security, but it is issued against these what you call as the sureties, or against the personal income of the person, because maybe the loan, maybe the salary or wages that he receives from the employer. Based on the employer's recommendation, personal loans are given. There are lease receivables in the sense some type of assets which are kept on lease basis, and lease contracts is the base for the recovery of the assets. Trade receivables and export receivables, that we have already studied in export these things. What we call as export receivables, mm, they are also a kind of collateral security. So all these securities put together can be converted into what we call as securitization, and marketable instruments are made ready for the investors. Now what happens, there is a one particular point in the last sentence here. In securitization, homogeneous pools of assets are identified. In this concept, what happens, while securitizing the assets, homogeneous assets are pulled out, means listed out. Say for example, DHFL may be having around 500 crore rupees of loans advances made. In that 500 crore rupees, a particular class of assets which are having a mortgage loans are pulled out, which may be around 250 crores. Made example, 50% of the loans are mortgage loans, 250. The list of all that loans which are issued against a mortgage are listed out. That is what we call as pooling out. When they are pulled out, the total cost of that asset is 250 crores. And these assets are issued as A class assets and evaluated as A class assets, and debenture bonds are issued against these things. Investors are going to buy these debentures against these assets. So like that, pooling is made, and accordingly the class of investments are decided, and the price of that particular debentures or the mutual funds are decided. So now it is a risk oriented things are calculated based on that. If there is a high risk, if there is a high risk, less investment. If there is a less investment, less risk, high investments. Like that, investors are also what call as taking the chance to increase their investment values. So here it is securitization of assets we have dealt in. Now we'll see just the securitization process, how it happens. How it happens? See, the securitization process starts with what you call as the organizer. Here, the person called organizer, the first initiator of securitization activity. It is a bank or the financial institution. In the example that I have discussed, DHFL is an organizer. DHFL is an organizer. See, the organizer is taking an idea of issuing its securities, that is converting its assets into securities. So the idea comes in. So what happens, they sell the receivables to the special purpose vehicles, SPV. What is this SPV? Special purpose vehicles are the experts or administrators who are buying the assets, that is buying the assets of the receivables of organization. It means that the right of collecting the revenues or the assets is transferred from the originator to the special vehicle purpose. Now, this special vehicle purpose is going to take the liquidity support from the legal atmosphere and credit rating agencies, and they create a kind of instruments. These special purpose vehicles who are connected to the marketable sorry, stock exchange markets and all that, they convert these sell. They are like a brokers. These brokers will convert these the securities of the DHFL into securities. The assets of the DHFL are converted into securities, and it is getting rated by the credit rating organization and by the what you call as the liquidity support people, that is the legal support business. And then they are securities are issued to the investors, and cash is received. This is one portion of contract. Or otherwise, directly the originator can also convert them through a help of what you call as the paid services of the special purpose vehicle. Instead of selling them the receivables, they directly convert into what you call as assets, and the loans are transferred to the investors. That loans are transferred to the investors, and they collect the money from them, the receivables from them. So this is what we call as the process of securitization. In securitization, originator, special vehicles, investors, credit rating organization, liquidity support organizations, all will come together and work. This is what the securitization process is. Now, why securitization is gaining more momentum? The Citibank, which has a branch in India, they first initiated the securitization in India in the year 1991. In the year 1991, what they have done is all the auto loans what the Citibank has given to people, thought that instead of keeping the bundle of that debtors in their list of assets, it is better to convert them into what you call as securities, and they started issuing the bonds to the investors, where lot of private investors started buying securities these securities. Then automatically off the balance sheet, so assets came off the balance sheets, and the capital of the Citibank has increased, and because of the much capitals that they have received against selling that instruments, they started expanding their business in the country to a larger extent. Because of the securitization process, Citibank could be able to grab more market in the country, because they got the liquid capital in their hands, converting the auto loans into securitization activity. So the need for securitization, if you can see, for the requirement of funds as a securitization of mode of financing, it is one of the mode of financing for enhancing the liquid funds and getting the capital. Then second one is it enhances the liquidity of the originator companies. Off balance sheet financing, removal of accounts from the balance sheet, that reduces the burden of collecting the money and all that, because once they are securitized, the special care will be taken by the special vehicles here, special purpose vehicles, who will take the burden of recovery of the loans and all that. And in the name, by using the name of the Citibank, they started collecting the money, and that money started distributing to the investors. Like that, this process has taken place. So automatically, the responsibility of the Citibanks or DHFL banks in collecting the loans and taking the burden of NPA is totally reduced, because that responsibility is transferred to some other organizations. To them it is being sold, and they convert that purchased assets into securities. Then last one is need for asset liability management of the financial institutions. So it is a asset liability management. Instead of creating the assets more, where the liability will be less, where the capital will come down and assets will increase, so business becomes staggered. You cannot have the liquid assets in your hand to expand more, because all the loans and advances that you have given, till the loans and advances gets completed, you don't have funds in your hand. Either you have to go for a fresh issue of the shares to enhance your capital to the level of authorized capital level and all that. It is very difficult for the companies to manage that initial public offers. Instead of going for that, they come out with the mutual fund bonds, they come out with the debenture bonds to the public, which are redeemable within 5 to 10 years period, depending on the assets against which the securities are issued. That is the securitization asset nature. Depending on that, it is a short term and long term bonds are being issued to the investors, and it is a good opportunity for the investors also. So the investing company will also enjoy the benefits, and the issuing company, that is the originator, will also enjoy the benefits. So this is how the need of securitization getting more momentum in the market today. Let us understand who are the parties involved in securitization. Depending on the services that are being expected by the originators, many more parties are involved in the securitization process. The number of parties are around 8 parties involved in that particular things. One is called as the first party is a originator. A firm that wants to securitize its assets is called as originator. They're called as originator. So the originator is going to pool out the assets and trying to sell those assets for conversion of securities and all that. The second party involved is the servicer or administrator. It collects the payment due from the uh, obligors, and obligors are the people who have taken the loans from that originator, obligors, and passes it to the special vehicle. So the administrator who is appointed by the originator will collect all that list of the obligators and payments due from the obligators, and passes it to the special vehicles, that is the organizations which are specialized, maybe uh, mm, what you call as the brokers or people who are legally involved in converting that asset into securities. That is what special uh, special purpose vehicles, SPV, special purpose vehicle, follows up with the delinquent borrowers and purposes legal remedies available against them. So these special vehicles will follow up the borrowers and pursues the legal remedies available against the defaulting borrowers, since it receives the installments and pays it to the special purpose vehicle. It is also called the receiving and paying agent. These special vehicles are also called as receiving and paying agents. These paying agents, in order to support the investors, they put obligations on the borrowers to pay the money regularly, and defaulting customers assets are recovered, and it is being transferred to the investors. So that responsibility is taken by the intermediary called special purpose vehicle. So now the special purpose vehicle, the issuer, also known as the special purpose vehicle, is the entity which would typically buy the assets that is securitized from the obligator. Special purpose vehicle is an entity specially created for the purpose of executing the deal. These are the group of the people or brokers who are specially involved or created that particular association to securitize the assets of a specific company. For example, DHFL assets in order to convert that, some brokers firm will come into existence, that is sand perfect pursuers, broking companies and all that, they will come into existence and they convert that asset into securities. The originator transfer the assets into the books of to the special vehicle, special purpose vehicles. In their book, the assets are transferred for the legal little assets. It takes the payment to the originator for the assets purchases and all that. So the payments are collected from this SPVs by the issuing authority, and SPVs will issue the securities to the investors. Or sometimes if the DHFL like companies originator himself is more advanced in the field of converting the assets into securities and want to issue, they can directly issue to the investors also. But normally special purpose vehicles are used, that is the intermediaries used, to whom the assets are sold by the originator to the special purpose vehicles, and these special purpose vehicles will take the charge of the assets and convert those assets into securities. The investors, normally the investors are the financial institutions, mutual funds, provident funds, pension funds, insurance companies, etc. These people are coming forward to invest money in that. They buy the securities of this kind. The obligor is the original borrower who has raised the loan from the originator. Uh, it is his outstanding loan amount that is transferred to the special vehicle. So obligators are the loans. So for example, for DHFL, if Tata company has